Good morning everyone. We are here this morning to commence our meeting a little later than usual due to the fact that we've actually had some training or review of the training regarding the statement of accounts earlier this morning, which was very informative. I'm sure will be reflected in our conversations during the course of the meeting. So welcome to everyone, particularly welcome to Sam and Julia, who have joined us as observers, and they're part of our accountancy team, a new part of our accountancy team. So welcome to you both. We hope to see you in person shortly, and to everyone else. So, okay. So if we can turn to the main agenda, please. And we have apologies for absence, please.
Thank you, Chairman. We've received apologies for absence from Councillor Stokes and Councillor King, but Councillor King is going to be observing the meeting via Teams today, Chairman. Thank you.
Thank you, Katrina, thank you. And we go to item 2, which is the declaration of members' interests. Peter.
Thank you, Madam Chair. I'm just remind people I'm a member of the Lincolnshire Pension Fund Committee.
And we have the minutes of our meeting held on the 13th of June 2022. And can I have your approval for those, please? Thank you, thank you. All those in favour? Thank you. Thank you. So now we move on to item 4, which is a draft statement of accounts, which is a weighty tome as usual. But we do thank all our finance staff for all the hard work in bringing these to us today, and also, as we know, to meet our submission deadlines, which we will explain a little later. So if I can perhaps pass over then to Michelle, who will take us through the narrative and other pertinent things, and then we can refer questions directly to her. Thank you.
Thank you very much, Chair. I'd just like to do a short introduction, then open the floor up for any questions. So we're asking the committee to provide any comments and approve our draft accounts for the County Council and for the Pension Fund, which have been presented to the external auditors to start their audit work, and they've been made available for public inspection. The statutory deadline for publishing our accounts is 31st of July for the draft accounts for inspection, and the final accounts is in the end of November. So we'll provide updates on the process during the September and the final accounts in November, hopefully. The accounts have been prepared in accordance with the relevant codes of practice, and the finance team have attended all relevant training to ensure we've incorporated updates to the codes in the accounts. Prior to the audit beginning, the auditors Mazars made us aware of a change in the accounting code that's currently being consulted upon, which relates to the method of valuing infrastructure assets, so our highway assets predominantly, on our balance sheet. So any local authority that hadn't had their previous year's account signed off at that point has basically been frozen, waiting for this update. We've prepared our accounts on the basis of our current process, but we are waiting to see what the outcome of that consultation is, and we'll apply any changes that are required at that point. So the narrative report gives an overview of the Council's financial health and performance. The COVID pandemic continued to be a prominent part in our accounts in terms of the grants we received and the costs incurred. So you'll see that there's a separate note for that, again, in the 21-22 accounts. The expectation is as those grants will discontinue, we'll just have some maybe tail end of grants that we've received during the year to finish off spending. So any liabilities or current pressures on the council's budget going into 22-23 will be for the council to fund and determine how they manage that during the current year. The 4 main financial statements of the accounts are the comprehensive income and expenditure statement. One of the main changes on that is relating to the pension liability, and that will be a theme throughout of our statements. The movements in reserve statement, there's a decrease there on usable reserves, predominantly to do with the way we've been financing our capital programme, and some reduction in our cash availability to do that. The balance sheet is the third statement. So again, a reduction in short-term investments there. That's to do with our cash balances and our use of reserves. an increase in the PPE valuation, which has been a theme for the last couple of years, and the change in the long-term liability around the pension liability. Again, a key change on the balance sheet. And the fourth statement is a cash flow statement, which is just a predominantly snapshot at the 31st of March of our cash balances. So just to reiterate a couple of the significant changes there. Current assets change relating to short-term investments as more internal cash balances have been used to fund our capital programme rather than undertaking borrowing. And a decrease in the pensions long-term liability affecting the income and expenditure statement and the balance sheet, which is the effect of the rise in bond yields increasing the discount rate, which reduces the overall liability. Again, pension liability is very much a long-term liability and doesn't affect the short-term finances of the council. Just another note to point out that during the training, Councillor Allen identified that the note 8 on our taxation and non-specific grant income didn't tally with the income and expenditure statement. We've just had a look at that, and we've found that the version in the accounts that were published wasn't the most up-to-date one, so we've just circulated a hard copy of the up-to-date note, and we'll make sure that gets into the accounts that go to the auditors and get published. So I'll just hand over for any questions.
Thank you, Michelle, and thank you for the just amending that one figure there, just for everybody's information. So I'll pass over to members of the committee for questions to Michelle. Thank you, Mark.
Thank you, Chairman. You, in your summary report to item 4, you mentioned the timetable we're working towards, which has a draft by the end of this month, which is here, and hopefully the final version of it ready for sign-off by Audit Committee on the 14th of November, again within the deadline for the timetable. Are we online to meet all that, and are external auditors fully aware of the dates that we're working towards, so that we can actually deliver to the timetable that we've actually got? And the second question, which relates to that, is that I think we're operating under sort of emergency timetables at the moment because of COVID, and the next year's reports will be back in line with the old dates. And does that mean that we are fully aware of the implications of that and are working at slightly different timetables to actually meet these new deadlines for the next financial year accounts?
So thank you very much for the question. I think the team always plan our work around the timetable that we work to. I think the challenge has been over the last couple of years the late questions that we've had from the auditors, and I think they've been quite diligent about some of the work that they've done specifically around the balance sheet valuations. About you'll be aware one of the questions we had a couple of years ago was about the energy from waste plant. They didn't have the assurance that they needed that we'd done that work with the appropriate level of external advice, so we sought that, and we've done that again for this year. Every year when we do these accounts, we take on board comments that they make, and we try to incorporate that into our timetable. I think it's safe to say that the timetable this year has been extended again to the end of November. The auditors, as far as I'm aware, have resourced the audit to undertake that audit in that timetable. The biggest challenge we've got at the minute is this outstanding change to the code around the infrastructure assets. Obviously, it's one of our largest asset bases, our highway assets in the balance sheet, and what work is going to be required to do that, and what work then they need to do to verify that we've done that properly. So we plan to do the work on time. We've obviously got the accounts completed. The auditors start their work, I think, next week, of today. So the auditors start their work today. I say that the challenge has always been some of the questions that they've asked, predominantly around the balance sheet. The timetable for next year comes forward, so draft accounts will be towards the end of May, and final accounts end of September. It's quite a challenging timetable, but one that we've worked to before, so hopefully we can do in the future.
Chairman, if I could just follow up, please. I'm quite sure that the internal team of officers will do their utmost to ensure that we do meet the timetable. Mazars, I think, have had resource problems in the past which have caused some difficulties. Have they given every comfort to the council that this time round they've got the resources to do things and they will raise issues at the right time so that we can meet the timetable and actually publish the accounts at the right time?
We're in regular contact with the Mazars lead for the Lincolnshire audit, as Claire is for the pension side as well. So they give us those assurances, and I think it's generally whether they come back to us in enough time with the questions that they ask. So we do speak to them regularly throughout the audit.
Thank you. I just want to ask regarding the notes that are presented. Last year we had quite a debate on the valuation of the energy from waste plant, and I'm just looking for, with the change of standards, how comfortable we are with the assumptions made within notes 1 and 2. Also, just a general comment that having come through the pandemic, it's actually looks to be quite a good balance sheet. Thank you.
So the main change that will happen to our balance sheet assets is the leasing note, and with the deferral of that, that's not something that's been reflected in the accounts yet. So that change has been deferred. I'm not aware of any other change that would have a material impact on the way we account for our assets. In respect of the energy from waste plant, the auditors recognised that was a specialist piece of engineering equipment, and they asked us to consider professional input into valuing that asset, which we did at the time, and we've followed up and we've had that asset valued by the same professionals again this year to provide that assurance to the auditors. Please, thank you.
Thank you, Chair. One pedant point, because it wouldn't be if I didn't go through the detail. Just on page 14, when we've got the unders and overs, I just find it easier to understand if an under is with bracket in the title, put brackets around under, just so people understand, or minus or whatever, just so they know which way around actually a minus score is, please. Just to take on Councillor Anson's point, with the code changes coming up, I've seen it enough times where actually all of a sudden you need a degree of expertise. And those experts are in very short supply and then all of a sudden in massive demand. Do we, not only on our side, as I said, but also on Mazar's point to say it's all right, us coming up with the answer, but can they check it? Do we have early sight as to what the code changes may require in terms of expertise that we may or may not have currently reserved? And if so, have we got them plugged in case we do need them?
I think it's safe to say the main change that will require expertise is the leasing change. I think that it's kind of been on the cards for a couple of years, so the team have been through numerous training sessions with SITFA. We've SITFA are our guide on that. So I think we've got the knowledge in-house to know what needs to happen with that. It would be more to do with the capacity to actually make the changes. So that's all planned in. I think the expertise in some of the other areas of the balance sheet is not financial expertise. So Rick's valuers, the valuers around the specialist engineering sites. So we have our expertise on that, and Mazars also get their own expertise in to verify what we've done with our experts. So I think that's all in place and that's been satisfactory.
So not obviously with this set of accounts, but moving forward, Michelle, we're confident we've got the expertise regarding any revisions to the national policies and how to account for highways, for instance.
I think we'll be in the same boat as every other local authority with infrastructure assets on the balance sheet. So the Society of County Treasurers working with SITFA at the moment to look at what changes to the code are required to undertake that. So I think there's a bit of joint learning that will happen across the sector in terms of local authority accounting, and SITFA will obviously provide the support for that as well.
Andrew.
Thank you, Chair. Note 36 on page 121, exit packages. We read daily workforce challenges, can't get the staff, etc., etc. And yet we've had a doubling of the cost of redundancies and termination packages. Was it not possible to offer retraining and suitable alternative employment to avoid those, or what's the story behind it in terms of reconfigurations or departing from certain businesses that meant we had to let the staff go with a payment?
Yeah, Chairman, if I could please. Yeah, that particular instance and that change, as you point out, Mr Middleton, was around delivery of a particular sizable efficiency saving that we had as part of the budget for this year. So we're going through a process at the moment whereby we are sort of re-engineering our business support function. It's quite a sizable function across the council, about 750 people, making it more reliant on technology and what have you, you know, with the new ways of working. And that jump in what would be, you know, a business as usual exit package figure is as a result of us going through that sizable process. Around about 30 officers left the council as a result of that restructuring. So,
if I may come back, Chair, if they're general business support people at a relatively low professional level, was it not possible to retrain and refocus them to areas of the business that we struggle to recruit?
Well, I guess if you look at some of the areas that we really find really difficult to recruit, we're talking things like skilled childcare lawyers, social workers, for example. So there is a difference in the type of roles. But yeah, we, as part of our redundancy and redeployment processes, we do go through a process of seeing if there are other roles available for individuals in the council as a matter of course. So.
Peter, thank you.
Yeah, thank you. Yeah, the statements appear pretty good to me at the moment. A couple of things really, and they're quite general, and I think it's really for Andrew or Michelle to answer that. How do we? Because I like to look into the future now, and the future's a little bit uncertain, as we all know. So how do we see the council's financial resilience over the next 2 or 3 years? Because bearing in mind all the general inflation and what's going on around the world, and the inevitable public pay increases that will be hitting us, and that can be substantial to any council. So I know we always sit there with reserves. So with this increase in costs that's going to come over the years, how do we see we're going to cover that? Because we can't keep pulling on reserves all the time, because you end up with nothing or very little. You haven't got an emergency package there if you spend it all. I just want some reassurance really of how you see the next 2 or 3 years on the resilience of this council. It's important to us all and every single resident in Lincolnshire.
Yeah, thanks, Councillor Cooper. It's a very, very pertinent point, and something that's live discussion point for us almost daily in terms of the moulding the financial plan for the council. So just as a bit of I guess as a bit of a summary about where we're at the moment, we're going through our we update and refresh the medium-term financial plan on an annual basis, covering at least three financial years. That is, it's becoming a difficult task at the moment, as you'd imagine, as you said, related to inflation. And we're seeing sort of the 3 sort of key pressures that we might see that have been different to previous years. So clearly there's the public sector pay debate. We know that we set the budget based on, as many other, well, pretty much every other council did, around 2%, because that was what the spending review figures were based on. And there's almost a discussion now about a minimum of a 4% pay award potentially for local government employees next year. So quite sizable. And when you're talking 1.7 to 2 million pounds for every percent in pay, that can add up quite quickly and can compound quite quickly. Clearly, like householders, we are starting to see an increase in energy costs coming down the line, and like householders, we're going to experience a step change in our energy bills from October when our current deal runs out. Again, you're talking 3, 4, 5 million pounds a year in terms of those figures. And then lastly, the impact on things like the national living wage on our major sort of outsourced contracts. So all all sizable. Now, we've talked, as you rightly pointed out, we've talked in past meetings about the financial volatility reserve in particular. It's quite a sizable one, high £40 million. And when you talk about resilience, I see that as something that's really key for the councils in order to plan through a difficult period like this. So you quite rightly say you wouldn't rely on just running that down and hoping for the best. I think as the council section 151 officer, the advice I'll be providing to council, whatever those numbers say at the end, is that over that 3, 4, 5 year period, we need to have a sustainable budget, and whatever that looks like, and whatever actions it takes to get to that point as well. So I think we are resilient. The Tip for Resilience Index shows we're resilient, but we can't rest on our laurels. And we've seen around the sector councils that don't take difficult decisions at the right time are the ones that end up getting in trouble. So we need to keep on having that debate. It's right to raise it in this committee as well, but more on it as we progress through the summer and autumn, I think, in terms of the next iteration of the financial plan. Thank you.
Thank you, Andrew. Stephen and then Ian. Thank you.
Thank you. Just picking up that last point, I noticed that you mentioned the pressures around income and energy costs and so on. And we've already heard that COVID, we've come through quite well and things are there, but I'm just really interested to know how we are assured that we're actually picking up all the right potential expenditures in the future. It would seem to me that the whole COVID, as we come out of it, is a risky one, and that there could be some quite significant pressures there, which we need to be aware of or need to be providing money for, possibly. I also would be concerned with the whole things around adult care and the health service, which could actually put a lot on. At the moment, I notice that we are sort of not necessarily spending all the money we need on that, but how can we be sure that we've got sufficient there for when those inevitably will start increasing in the future?
Thanks, Councillor Bunny. So yeah, clearly, yeah, you're right. We've come out the other side of the official part of the pandemic, haven't we? Really, if that's the right phrase for it. And we've seen a sizable change, for example, in our children in care numbers. They're different compared to what they were prior to the pandemic. And the Children's Services Directorate have got a plan to try and resolve that in terms of placements, what have you. You're also right to point out about the care reform agenda, and there's a ton of work going on at that at the moment in terms of understanding how that impacts upon the care market in Lincolnshire. A lot of work across the sector, whether it's county level or broader within Glen Garrett's professional circles in ADAS, in terms of how all different councils can support each other to understand the implications of all of that. So yeah, there are other factors that will come into play as we come to sort of settling on what that medium-term position looks like. But I guess between the points you've made and the points Councillor Cooper have made, there's a lot of volatility in local government at the moment, and we'll continue to do so.
If I just might, my concern is also a national one. We've just had this raise, I believe, in national insurance and things, and various things which we're told are going to be putting into adult care and health. We're also now in a position where we might be cutting. So I do think there's quite a lot of concerns there that I hope that we are continuing to keep a very careful eye on, because we, as you say, it's very volatile, local government and national government.
I haven't got anything to add other than probably to agree. So yeah, thanks, Councillor Rawlins.
Living in pretty challenging times, and I'm likely to do so for the foreseeable future. Ian.
Thank you. Again, I'm probably, and forgive me, this is probably my ignorance or anything else about how this might be covered by scrutiny or anywhere else. Because then you have the halo effect of the cost pressures, as we said, because what happens is, again, you start looking at council tax rises and effectively then people's affordability, increased non-payment, increased debt, costs, etc., to go alongside this. I suppose my question is, normally, in my little business head, is I would marry up the funding with the risk and the project. So if I've got a long-term project and long-term funding, I wouldn't use necessarily, if I'm doing long-term projects potentially with some of these, you say, the highways and everything else, I wouldn't be utilising my short-term funding. And I don't know, again, in terms of balancing the risk with the volatility, about whether that's something you would do and how we get assurance, and again, whether it comes to this committee or other ones. So I apologise if it's to the wrong company, but that's my question.
I can pick up some of the detail about budget setting process, if that helps. So each year when we update our medium-term financial plan, we'll look at the revenue impact of some of our bigger schemes and capital projects. So we've got quite a few on our books at the moment. So we'll phase and look at the phasing of the requirement of the money required for those, and that gets built into our borrowing costs and the long-term impact of our revenue budgets for those. There's contingency built into those. So we borrow when we need to borrow based on the span of the project. We do sometimes have underspends on our capital programme because there's slippage in the delivery of those, but we deal with those in year. So we are borrowing when we need to based on the life of the project. In terms of some of the short-term measures we've made, so when we set the budget this year, we increased our contingency on the knowledge that there was a lot of volatility, particularly around inflation and some of the impacts of COVID. So we'd already bolstered our revenue contingency budget to deal with some of those in-year impacts, and we've still got our financial volatility reserve, which currently just sits at under 47 million, which is our kind of buffer as well against those things.
I think, and then we don't, and these are dim questions, but again, just to get them on the ticket, we don't see any limitation on our borrowing capability as far as we're concerned. I think we're getting into very dark areas if we do find restrictions on our borrowing, but if that's built in, there's assumptions in there.
The limitation is our affordability. So it's not the ability to borrow that's the limit, it's our affordability to repay that is the limit. So that's why we do the annual process of looking at what's in the programme. We'll go through a process over the summer and autumn, again, looking at the affordability of what's in our programme currently. There are some risks in there around the supply chain and the growth in costs around the construction industry generally. So that's something we're going to be looking at to make sure what we've got in our programme that's committed to we can afford, and then we'll look to whether that means any other schemes get slipped back or pushed back into a time frame when we to give that assurance about the affordability. So the borrowing's not the issue, it's the affordability to repay that's the issue.
Chair, thanks. An observation on Councillor Bunny's question. This committee has frequently cited anxiety around the whole adult social care arena, staff costs, ability to get and retain staff, etc., massive turnover in staffing, etc. We are now 11 days into an integrated care system, and I can assure you that that is on the risk register for every integrated care system in the land. And it's not a panacea, it's a government initiative which we have to believe will put the health service and the Glengarrds of this world in the same room, and there is mutual self-interest in sorting it, because inability to deliver appropriate adult social care packages leads to block beds, and block beds are a waste on the system. And block beds mean the ambulances can't discharge, and therefore the system has a very, very high interest in sorting this. And it may mean some very uncomfortable decisions that we have quoted at us constantly, that Aldi and Morrison's pay way better than care staff. Well, we've got to recognise the fact that it's not an easy job being a carer, and Glengarrard's quoted to me figures of 20-30% higher than current rates if we are to crack this. But there is a system incentive to get it cracked, because the costs of blocking up the NHS outweigh probably the initial cost of making social care roles more attractive.
Thank you, Andrew. Again, as we've said, horizon scanning, looking forward, there's going to be some sort of serious topics for our officers to consider, and we've touched on those in previous meetings. Mark, Keith.
Thank you. I disagree with that last comment, and indeed perhaps the elderly that are sitting in the national health system in hospitals would be better cared for in the social care sector as well. So that's another incentive to move them. But that's not my question. I've got two questions, one of which is on pensions, and it's to do with note 14, and it's the valuations, or the ways that we go about valuing, and it's the three-level system that we've actually got. I just wondered whether the awkward item, which seems to be item 3, is if there is, could you give me an indication of where you see within the items that have been identified in item 3, which are perhaps the risky ones, and do we know what overall risk, should we say, there is within the overall system associated with level 3? I mean, is it a significant volume of risk? And if it is, let me know. If it isn't, I'll have less concerns. But then within the list in item 3, which do you see as being the most risky item? So that's my first question. And the second question is more to do with the general accounts, and it's to do with reserves. I think in the past we've always used reserves almost like a balancing figure, because we can use reserves and then replenish them. So overall, at the end of the year, the reserves probably haven't really been touched. I think this year, or this last financial year, we've actually used genuinely reserves which haven't been replenished. And do you see that as being the way of the future by necessity, because of the risks to our income? And the inability to, perhaps reduce expenditure in some of the service areas. And how is that being monitored, and when does it become a real issue?
I'll just pick up on the reserves, and then I'll let Claire speak to you about the asset valuations on the pension side. So in terms of our reserves, there will always be some significant movement in reserves each year, because they're how we handle some of the grants that we get. So we would have had things like COVID grants going into the balance sheet that have been moved over and then drawn down during last year. That would have been the case for some of the movement in reserves. So there's always some movement. I think the key one for us to look at is those reserves that are there for the item, the events that we hadn't foreseen, so that do support the resilience of the council. So things like the financial volatility reserve, that's been fairly steady at around 50 million for the last few years, and the auditors will be looking at that kind of level to see, to make a judgment around our going concern and our financial sustainability. And obviously we have a general reserve as well, which is around 16 million. So they are the kind of ports of last resort. But in terms of other usable reserves, we report on those during the year as part of our budget management. So there'll be plans during budget setting. We plan to use those. Most of the earmarked reserves are there for specific purposes, such as development fund, things like that. So they'll be reported on during the year, and sometimes they're not needed to be drawn down because of the underspends and factors come into play, but that they're generally movement in the year. Some of the change this year is obviously to do with the cash balances.
If I could just come back on that. Very interesting, Michelle, all that. But I think the question I was asking is that I think in previous years we have obviously used reserves and then perhaps replenish them as grants arrive and so on. I think in 21-22 is the first year we've actually used reserves that haven't been replenished. And that was really my concern. If we are starting to use reserves and they're not being replenished, reserves, will only last a certain length of time in terms of our accounting and so on. Is that a concern that we've got, because we see that as being the norm from now on? And if it is the norm from now on, how do we actually value what level of reserves we actually have to put into the budget, and how long may they last before we get into a difficult situation? That was really the question.
So the concern should be there if we are using reserves to fund ongoing costs, so costs that are recurring. Reserves will usually be used to fund one-off costs, or funds that costs that can be limited. So some of the COVID stuff, one-off costs that we've incurred, the challenge will be if those costs continue without the grant backing to support them. So the concern should be there if we are using reserves to fund ongoing costs. The financial volatility reserve is there to give us some time to move from permanent solutions, if we need to find them, to any ongoing pressures. So it just gives us a bit of time to develop things like the savings strategy that Andrew spoke about earlier, if we need to do that to balance our books. But there will always be, there's been a general comment from the government about the level of reserves held by local authorities. So, we're not seen to be using the reserves to the degree that we ought to be by the local central government. Some of the districts have been using their reserves for various things. So I'm not concerned, because I don't think we're using reserves to fund things that are an ongoing cost pressure rather than dealing with the ongoing cost pressure that we've got. So the test will be whether we can do that in the future without, you know, calling on those reserves. Do you want me to pass to Claire to just pick up on the, is that okay? Okay.
So in terms of the valuation of pension fund assets, you're right, note 14 explains the different levels, and those levels are set by the accounting standards. In terms of the first two levels, level 1 and level 2, they're pretty much looking at market evidence. So at level 1, there'll be market valuations on the balance sheet date, which will be used for those. In terms of level 2, it relates primarily to pooled funds, so where the underlying asset in the pool has got a market valuation, but we've bought units in that, so it might be global equities, but we're holding units, so they will be priced. And they're priced for us by the fund's custodian, so there's a third-party external valuation on those. In terms of level 3, the biggest area for us is around unquoted holdings, so private equity, private debt, infrastructure. The valuations there are primarily derived from the preparation of financial statements for those underlying funds, and then we will be carrying on our balance sheet our share of those. I suppose the scrutiny that you're doing today and looking at the accounts and deciding how accurately they reflect the picture for the pension fund and the county council is something similar that there will be for those exercises. They're long-term investments though, so there may be movements on them, there may be assumptions made within them, but they only reflect a point in time for those. And as part of note 14, we have some sensitivity information which we get from an external manager, which explains how much they think those valuations may vary around the actual valuation which is given, and they range from anything for 8% on hedge funds to 20%, 21% on private equity and property.
Thank you, Chairman. So the valuation comes from the managers who are managing those various assets. We're here to effectively audit, you know, the process and procedures that the council's got in place to actually ensure that the valuations, you know, of everything that we do is as accurate as we can make it. Does anybody actually check the accuracy of what you're being told, so that you can give us comfort at this committee that what is being reported then is a fair valuation?
Yep. So those accounts will be covered by the same regime that we are, so there'll be an external audit for those accounts, which is why we have to wait such a long time for some of those level 3 valuations to come in. We've got just over half of them at the minute, but we're still outstanding those for the 31st of March. So they're going through that process. We also use a custodian who validates those valuations on behalf of the fund. In addition to that, all the managers that we use are subject to an audit control regime where their processes, which covers all their processes, but including valuations, is tested on an annual basis, and those reports are made available to all investors, and we review those on an annual basis to make sure that we're happy with the underlying controls and arrangements that they have in place.
Thank you, Mark. Steve, you indicated.
Yes, I've got a question which is on the annual government statement. Does that come up now or later?
Yes, I'll pass over to Lucy here, but or Michelle. We're going to, actually that's part of the procedure, we're going to defer that particular item.
That they are part of the draft accounts that go to the auditor. If there's a specific question, we're happy to take it, but obviously we've got a more thorough item to review the AGS in September. So,
well, just very quickly, it's to do with the companies that we hold. I notice, and again, this might be my ignorance as being a fairly new councillor, but for the last 2 years, I'm aware that the Lincolnshire Future Limited and the Lincolnshire County Property Limited have not been trading, and I'm just wondering whether we still need them if they're not being trading and what the future holds for them.
Yeah, I'll just take that one briefly. So we're currently undertaking a review of the council's property function at the moment. So things like that are part of that debate that we're having at the moment. So there's current interim leadership arrangements whereby corporate property is reported over to me, and we've got an interim assistant director in place helping me conduct that review. So hopefully be able to provide some further feedback in due course on that particular point. So.
Thank you, Andrew. And obviously, we'll have the paper in September, as Michelle said, to thoroughly go through the AGS prior to the whole thing being reviewed by the external auditors. Okay. On the, are there any further questions from members on other issues? And we have touched on, I think, the main and salient points. Obviously, the increase in the pension asset, as Claire's explained to us, these are all very long-term issues. As we know, it dipped substantially the year before, so yeah, it depends on many factors, and these valuations are part of that. In terms of our income generally, obviously, we're getting quite a lot of grants from central government, so the COVID grants, I think it's fair to say, will be a thing of the past. So we have got to look to, as we said, to manage our budgets very carefully. And to that end, in terms of the scrutiny of those and how that fits in with our work plan, we're having a joint meeting with the chair and vice chair, myself and Councillor Allen, on the 1st of September with the chair and vice chair of the Overview and Scrutiny Management Board to that end, to set up some joint working with scrutiny. I think the looking forward issues, again, there's some huge volatility there, and in terms of keeping our reserves intact, the financial volatility reserve is really important, and that it's beholding on the council to look very carefully at when we increase budgets for spending, things like that, to know over the term how those are going to affect our bottom line, because our day-to-day costs are not one-offs. When you put something in the budget, it's there for usually several years hence. So that has a large effect on our financial volatility reserve, and again, inflation and product costs are just terribly unpredictable at the moment, are likely to rise rather than decrease, I'm afraid. In terms of the just a valuation of our assets, Michelle, we did touch on the discussions we had prior to this meeting regarding the issue of school assets transferring to academies, a multi-academy trust, and we understand that is going to be the government's preference going forward. So what effect will that have on our balance sheet looking to 2030?
I think it's safe to say that as a school academises, they generally come off our balance sheet as an asset because we don't control the asset anymore. So I think the notes to the accounts kind of explain that. It will mean a reduction in our balance sheet value in terms of our long-term assets, our property assets. It will also probably mean the reduction of some of the liability around maintaining those assets as well. So it will be a reduction in our balance sheet. It doesn't impact on the overall financial standing of the council, though, in terms of financial sustainability. I don't think it does anyway. But the government guidance at the moment is they would like all schools to be part of either an academy or an academy trust by 2030, I understand. So that will have an impact on how those assets are valued on our balance sheet.
And just an addendum to that, the PFI contracts we have as listed in the accounts on the schools, if those schools become academies, those liabilities presumably still, we retain the liabilities and they don't transfer to the school. So I'm right in understanding that or not?
The PFI note in the accounts does give an example of where some of the schools have academised already that we've got PFI contracts on, and I think that's been negotiated about how those leases work. So I think it's about looking at each on a individual basis. But I say we have already got examples of that with some of the special schools that have been academised already.
Well, thank you for that explanation. Just another thing, again, Ian touched on this, is the actual cash flow of the organisation. I know the cash flow statement isn't as pertinent probably to a public authority as it would be. It'd be the cash flow statement, the king statement in any commercial business, because it's the cash that would be crucial in your endeavours. But even for a local authority, we are the districts and the city council, etc., are collecting the council tax. Obviously, the majority of the council tax is actually is the LCC portion, and that is collected by the districts, and then there will either be a surplus or a deficit on that collection fund. Now, historically, because of the growth in the housing market, we've tended to have a surplus that's distributed to us at some point from the districts after the event. But there's always the possibility of a deficit, particularly, as Ian pointed out, in current circumstances where household budgets are going to be very badly stretched, and despite the fact that not paying your council tax is a criminal offence and people won't want to risk that, you know, there's going to be some cash flow implications on the districts who will be trying to mitigate those worst effects on households. Any comments, Michelle?
Just so when we set our budget at the beginning of the year, it's based on the information that the districts provide to us on their collection fund, you know, stance at that point. So they do assume some non-collection of council tax. I think they've got fairly good collection rates in Lincolnshire, but they do assume some non-collection. So we base our budgets on their expected collection basis anyway. Each of the districts does have a scheme in place to support those people that are on benefits and pensioners and things like that. So so they will expect people to go to them for that. The other side of that, of course, is council tax growth base, the growth of the housing base. So we make some very prudent estimates around that. So that can be the opposite of non-collection, I suppose. So there is always a variance at the end of the year, but you know, it's usually within a value that's quite manageable for us.
Excuse me. So there'll be an adequate level of tolerance on that based on your predictions to start off, which will be on a conservative basis. Yeah. Okay. That's fantastic. Thank you. Any further questions for Michelle and colleagues? No? Well, thank you again for our team in producing the accounts for us, and we note everything that's been explained to us. So, members, I think we've been tasked with scrutinising and commenting on the draft financial statements. Are you all happy that we've done that satisfactorily? Thank you. Okay. So I think that concludes item 4, and thank you to everyone. So if we can move on to item 5, which is the internal audit annual report.
Thank you, Chairman. Good morning, everyone. I'm pleased to present my Head of Internal Audit opinion and provide the Audit Committee with details of the results of our internal audit work during 21-22. As the committee is aware, it's been a challenging year for the internal audit function, with resources being low during the year. But that said, I've been able to provide an annual opinion over the Council's governance, risk and control environment. And given the discussions that we've had just a moment ago around some of the uncertainty and volatility facing the council, having good systems and processes around governance, risk and control is vital for the success of the council. So I'm really pleased to be able to give a positive opinion. In forming my opinion, I leverage assurance from various sources of assurance, from management through the combined assurance report, which was presented to the Audit Committee in February 22, and other assurance providers such as the performance team, risk management and external inspections, and also obviously internal audit work. If I can take you to page 268, that of the supplementary agenda pack, that provides you with the headlines of my opinion. You see, as I say, it's a positive opinion with governance, risk and financial control performing well and internal control performing adequately. Now, adequately is an audit and accountancy sort of terminology. That's still a positive opinion, but I just wanted to make sure that you were aware that that's still a positive opinion. The opinion recognises that the council has good arrangements in place, but it also acknowledges that there's areas of continuous improvement. But I am not drawing any significant issues to the attention of the committee. But I have highlighted within the rationale for my opinion, particularly on page 269 and 271, areas that have been included in the annual governance statement and areas for consideration in the annual governance statement. So the remaining pages of the report sets out the rationale and information I used to help form the opinion. It is at high level, but hopefully that gives committee members an insight of how I've pulled that together. From page 277, the report provides information on the outcome of internal work and benchmarking information around assurances and recommendations. We have obviously provided progress reports during the year. This pulls it all together in one place. So I would draw from those information, I would draw the committee's attention to the following key messages. The higher level of assurance opinions and less high priority recommendations, which is consistent with an improving picture. There has been no restrictions in scope or impairment in conducting the work from the internal audit team. That's a very key reporting to the committee, because the success of an internal audit function is their independence and objectivity and their ability to discharge their role effectively. There have been, however, some challenges in progress and delivery. As we reported during the year, low in-house resources have had an impact. We did revise the plan in September last year. And whilst we have had support from the council through resources to engage external suppliers, the absence of key roles has meant that the impact on some delivery timescales and also some engagement with management. And you will see, obviously, working collaboratively with management is key to our success. And over the next few months, it's important that we reconnect with management with better communication and engagement going forward. And I'm pleased to report that we've had a successful recruitment of 5 new people being engaged, and that will help build the capacity, particularly within the Lincolnshire County Council service delivery. And the long-term secondment is coming back, which is a vital individual at a key role within the service. So they're coming back from the 1st of August. Despite some of those challenges, we reported at the last meeting that we had a successful external quality assessment that confirms that the resilience, the actions that we're taking to improve resilience and the quality of the team in conforming to the public sector internal audit standards. And on page 280, I provide the committee with details of our quality insurance plan, which are the main areas of continuous improvement. Finally, I've provided the committee with information on Assurance Lincolnshire's external clients, which is on page 284. This is where we work with other public sector bodies, predominantly within Lincolnshire and mainly Lincolnshire districts. So we work as a collaborative partnership in terms of delivering internal audit services. We work at promoting good practice, seeking to maintain high quality internal audit within Lincolnshire, and also providing value for money around a very competitive fee for our services to other public sector bodies. So I'm happy to take any questions on that paper from the committee.
Thank you, Lucy, for a very comprehensive report. Andrew.
Yeah, you've been very frank, and congratulations on the external assessment. It was pretty damn good, wasn't it? Yeah. But you've said you've struggled, not with budget, I understand, but with getting the staff to fulfil all the programme. But you've had a good recruitment round. Do you feel you've entered calmer waters in terms of being able to source an appropriate cohort of new staff, bearing in mind there'll always be departures and turnover? Are you on a steady state for the next few years, do you think?
I think it'd be difficult for me to say it'll be a steady state because the workplace and work market is quite turbulent at the moment. What we've got and what the external assessment said is that we've got a strategy in place that actually is sound. It's making best use of the apprenticeship scheme, and we're also working together with our finance team across the piece to look at how we can make best use of the graduate scheme and grow our own for different levels within the business. So we are actually looking at how we're doing that now, and a strategy that will look at the changing marketplace and also making the best use of the hybrid approach and widening our pool of skills access. So I think we've got a good strategy. It has been very turbulent within our team. We had like a 25% turnover churn, which is, and I hate to use the word unprecedented, I've never in all my career had that much of change. But that change has also given us an opportunity to encourage new people. So we've got new skills in, really pleased that we've got 5 new people in with all the attributes that will make a good auditor. And what we're looking at is the technical side through apprenticeship. So it's making sure we have the attributes and the skills set, not necessarily going out for qualification, which is where we didn't get people like fully fledged auditors. So we're looking at growing our own through a very robust and good apprenticeship scheme.
Mark and then Ian.
I've got 2 questions, Lucy. One of which is sort of follow-up to the one that's just been asked about resources. You mentioned the report is very good, and I wouldn't want to see this quality change. So I'm very keen to ensure that that the resources are there to do that. You mentioned engagement with management. Is that simply a question of having the resources to do so, or is there any resistance from management to engage with you? So will these resources help deal with that? I think you almost said that is going to be the case anyway. The second part in relation to the team that's working on the internal audit process is to do with succession planning. Senior managers change for one reason or another, and succession planning is quite important. So, I mean, is the appropriate succession planning taking place to replace a very key person in the internal audit team? And when I mean that, I mean as planned, and I think planned was to have some sort of degree of dual involvement almost, an appointment so that they could work with you for a period of time, so that they were up and running, as soon as you departed on your retirement. So that was one question. The second question, and it's maybe just me being stupid, it's page 273 in the internal audit report. I'm either misreading things entirely or there's something that needs a change, and it's to do with the pie chart. We've got 273 in the report pack. Or it's your page 6. And it says overall there continues to be a high level of assurance, 59%. And I have problems with pie charts because they're always done in funny colours that I can't recognise, but the big block of 59% seems to be that red colour, which says low levels of assurance. So am I misreading something subtle in that, or is there a mismatch? Because the text says high level of insurance is 59%, and the pie chart seems to indicate that the red at 59% is a low level of assurance.
I'll cover that to page 2.3, which is the easy one. I think it is presentation. So the 59% on the pie chart is green, which is a high level of assurance. So if it's not readable in black and white or whatever it is, then I can make sure that that's so you have red, amber and green, which is
I'm sorry, I can just about see now that the red is the very small slither, or the darker shade of whatever the colours are. I did say I have great problems with greens and reds and
we'll look at making sure that that's more accessible and readable in the future reports.
Yeah.
I'll pick up. So in terms of engagement with management, I think we've had some really good constructive feedback through our audit process and through 360 feedback around resources, and it's just really building those relationships up with the liaison, because one of the key roles that we haven't had is a principal auditor to keep those liaison and keep up to date across the whole of the county council. So I think that's, so the building relationships, it isn't about a lack of accessibility, it's both sides coming together, sharing intelligence, basically focusing the risk and assurance work on where it matters. So I just recognise that that has had an impact through the COVID, the remote working, and we've adapted, but it's making things take a bit longer, so we just need to work with management and my audit team to recognise that often sending an email isn't a way to communicate. So it's just using the tools better, having a bit of a workshop and an open and frank discussion with management on where we can add value and how we can improve the processes going forward. So and it's about continuous improvement. So it's not broken because but it's about obviously that continuous improvement. Succession planning, we have got a succession planning approach in place. It's linked to the workforce strategy at all levels, and that's around coaching, mentoring, shadowing, and getting people professionally qualified. There's a roadmap in connection with my role, for example, and there is a plan around recruitment, and that plan to have that handover is still in place. But I think I'll hand over to Andrew and Michelle if there's any sort of particular things that they want to add, but there is a plan in place and there's a roadmap to do that.
Could I just ask before anybody else answers? It's the roadmap that I'm keen on. Is the roadmap being met in terms of direction and time frames?
We yes, in terms of people getting qualified and coaching and mentoring, but in terms of recruitment, I think that's best. I haven't got a timetable for that, so I can't answer that question. I'll hand over to Andrew and Michelle.
Yeah, well, I'll just add to it. Obviously, we are close to being in a position where we can potentially go out to market. There's just having a bit of a debate about potential accountabilities for one parts of the service that Lucy's currently responsible for around health and safety. But pretty confident in terms of the discussions that we've had with Lucy in terms of when she would be seeking to retire, that we'll be able to put in a recruitment process. Whether we get the right person or not is a different matter, and that is at the vagaries of whoever happens to apply at the time. But there is time still.
That you're fully in line with the roadmap then in terms of going through this process?
Yes, at the moment, yeah.
I think that was all your questions. I think also I gave plenty of notice.
Okay. Thank you, Stephen, and then Ian.
Thank you. I've got another point completely, really. On page 270 of the Big Pack number 3 on your report, you're reporting about the fire and rescue service. I must admit, as a councillor, I tend to get some mixed messages here. I can see that there is clearly a requirement for improvement rating being issued. We're also told, and observation and things, that how well our fire service is doing. So I appreciate we have an action plan. Are we convinced that the performance management framework is able to look at that and make that action plan work so that we do get the service that we believe that we actually have?
We do have a robust performance framework, and the Chief Fire Officer reports into that. I can get the Chief Fire Officer to give you an update on progress and delivery around that. We've seen the information going through the appropriate scrutiny committee, so it's just keeping that on board. I've put it in my governance rationale because it's important that that it gives you that complete picture. The corporate leadership team also have a performance oversight. So again, the level of detail and how often that comes back in, I'm not cited to, but I do know that there's an action plan which is monitored by the Chief Fire Officer, and we will be following up that in the latter year in terms of implementing.
Thank you, Chair. I think this is a series of rare moments for me. So first of all, Lucy, I'm going to pay a massive congratulations to you and the team. Absolutely great score, great report, really good. I think actually to Councillor Allen's point about recruitment, the thing for me with you is you're one of those unicorns that actually when you try and replace a unicorn, it's quite hard to find another unicorn. And actually you have to split up the unicorn into a horse and a narwhal. With that, and again, I take Andrew's point on that. Actually, this is an opportunity to have a look about how we do some of these things. I think my only observation really is actually just a reflection for the committee, but also just a challenge to the business. If you look on page 289, so at your page 22, it's the overdue incomplete actions for the prior audit. You've got a number of things in there. One is the cybersecurity, which has been, you've got 2 high-level overdue actions that have been in there for 3 years. You've got treasury management system, ironically about succession planning, which is quite amusing, been in there for nearly 2 years. The environment we're moving into, for me, over all the years of internal audit recommendations have a shelf life, and they're only valid for a certain amount of time. And the longer they go on, the less valid you are, because the business is inherently, implicitly or explicitly taking and accepting that level of risk based on what you found. Something that's been on there for 3 years, we've got a bit of a problem. And with all the pressures that we're going to have on the systems, which you've already mentioned, that's going to increase the pressure on the controls, because people are going to, again, it's not necessarily just the controls themselves, it's the people administering the controls. Their private lives, why they make bad decisions, is going to get worse and worse when there's cost pressures on. So I think my reflection back to this committee is when we start having a look at incomplete actions, the timescales to get them in is great, but actually there's also just an explicit understanding that you're taking a risk the longer you leave it. Something that's taken 3 years to resolve, even for a council, that's a long time. If not, the answer is why we still got it on there. So that's my challenge back to you, Lucy, but more specifically to the business.
So just to respond, so when I've obviously pulled this report together, I have asked Matt to go back on those individual recommendations, one to see if they're still relevant, because obviously the time lag, and then bring an update to the committee in the next progress report. So he's going back to challenge some of those. Some of those, particularly around the cyber, are long term, so they have been on the radar. So, but I am checking to make sure that they are relevant and what the current status is, so that you can have that audit trail. And as you say, a systems only has a 3-year shelf life around, because controls change, systems change. So that's why we've looked back, and I've asked Matt to do that for me.
I'd probably still like the business to respond, because even if you have got long-term issues in there, you make a decision about when those actions are going to be due by, and they drag on and drag on and drag on. It is implicitly accepting that level of the risk, and the group responsible for accepting the risk, I'm looking to my left at this point in time, even if they track on for 3 years, the answer is, okay, they're high for a reason, and even Amber's are there for a reason. I'm just saying, it's implicitly built in, and you kind of drift into, and it's not a tidying up exercise, it's a behaviour change, and it's a decision change, and it's a risk-based change. So even if the team go away and chase up, are they still relevant? I think my answer is that even in the longer-term projects, anything 18 months from the point of when you said it was going to be delivered, we've got a problem.
Just come back. I think the other thing that I look in, and when I pulled my head of internal, is the assurance level. So even though some are outstanding, you've still got very high or substantial assurance over that piece of work. So if I was going to focus on any, it's where there's limited assurance. I'm not detracting from the importance of recommendations tracker, but I'm just trying to give you the assurance in when I was pulling together my internal control opinion, which is one of this indicators is around ensuring that management actions are implemented. So, but I can get the business, because it's various parts of the business on these recommendations, so I can get the business to respond about the risk as we follow up, if that's okay, rather than trying to triage it here.
And that's fine. I think they say when they're high, you're more likely to have a limited assurance anyway. So for me, they're quite they're linked. You know, having old, medium, and limited, low, I'm less concerned about. Again, it's the story behind it. It's not the mechanics. It's not the numbers. And like I say, so I take your point, Lucy. But like I say, if they're already high issues, they're likely to be limited assurance. We've still got the same problem.
Andrew.
Thanks, Chairman. Lucy sort of jumped in and said what I was going to say. So yeah, I'll take the it's okay. I'll take the commitment to take that way, and we can refine at the next committee. Yeah.
Thank you, Andrew, for that, and Lucy also. And looking to any further questions members would like to raise? No. So we have the recommendation. Do we have a second proposal and second approval? Thank you. And so if we could then move on to item 6, which is the Counterford annual report.
Thank you, Chairman. So I'm pleased to present the Counterford's annual report for 2022. As the committee is aware, the council has a strong stance to Counterford with appropriate policies, procedures and whistleblowing arrangements in place that work well. The council also has a dedicated resource to raise Counterford awareness, undertake proactive work and investigate fraud, working with the police and our HR team to seek appropriate sanctions and redress. The committee is responsible for ensuring these arrangements are effective, and it approves the Counterford work plan. This report provides a summary of the work that's delivered and the outcomes that have been delivered during 21-22. So I would just draw your attention to the following areas within the report. That 90% of the Counterford plan was delivered, which included raising awareness on the increased risk of fraud and the outcome of proactive work around grants. The team continued to investigate fraud, and there were a number of dismissals and referrals to the police in discharging that work. And due diligence by management and council teams has helped detect and prevent fraud during the year, which again mainly been around mandate fraud and the COVID business grants risk of fraud. And finally, the public sector bodies within Lincolnshire work effectively together to try and counter fraud within the Lincolnshire Counter-Fraud partnership. So this report provides you with the outcome of that work. It's at a high level, but hopefully it gives you sufficient information to give you assurance around the effectiveness of the council's counter-fraud arrangements. Happy to take any questions.
Thank you very much, Chairman. Thank you, Lucy. Again, I think a very good report, very comprehensive in terms of how we deal with fraud. I've just got a general query, and it's to do with where fraud is taking place, and you do make some reference to it on page 5 of your report. It seems to be predominantly in 2 district areas, which is odd, but it does seem as though the fraud numbers have decreased quite considerably in those district areas. So whilst we might not know why, there's 2 districts where most of the criminal activity seems to be taking place. Do we know why it's actually reduced in those areas? Or is this just something that comes from the summary of the various reports that arrive from all sorts of directions in the county area?
I will hand over to Matt, but I just think I think you may be referring to page 18, which is around whistleblowing referrals rather than actually frauds. So they're the number of contacts rather than across the districts, not necessarily fraud. But I might be misunderstanding you, but I'll hand over to, if you can just reference the page that you're looking at, and I'll hand over to Matt.
It's page 18 in our report, in our pack, and page 5 and sorry, it is whistleblowing. So whether I can equate whistleblowing to levels of fraud, I don't know. I'll let you answer that.
Yep, thank you, Chair. Just to come in, we don't know. No, well, we don't really know, and it says so in the report. I think the only thing we think is those two districts have an in-house fraud resource. So whether that has an impact then on the amount of fraud that they sort of comes through and gets reported. But essentially, though, they always seem to have been high, but we've never got to the bottom of why that is. But possibly it's the reason that they've got some in-house fraud resource.
I think you might be right.
Yeah, could I follow on that? Because when on page 15 it says there is no obvious reason why referrals relate mainly to these two districts, and yet you've given a tentative reason, Matt, i.e. they've got an in-house fraud resource, which may mean they've got a positive culture around whistleblowing that actually leads to saving public money. There's a grand figure of about 11 million saved over 10 years. So that suggests that investing in fraud prevention and following up whistleblowing is a good return on investment. In pure cash terms, as well as creating a culture which says, don't think about it, sunshine, because you'll get caught and there are all sorts of social consequences of that. So insofar as two districts are not the crime-ridden parts of the county, but Boston, of course, because of its, integrity of the civic leadership there, clearly they're very law-abiding. I cannot believe that there is an intrinsic reluctance to defraud in Boston any more than there is anywhere else. So I suggest it's worth delving deeper on this, because if fraud prevention is a cost-effective intervention and investment, and let's assume there's a similar amount of fraud throughout the county, and two areas have caught more of it because whistleblowers have been encouraged, etc., I would be interested to know whether that's the case. And a second point on that, in the NHS, as you're probably aware, whistleblowing is allegedly encouraged, but 60% of whistleblowers report that they've suffered adverse consequences as a result of bringing up patient safety issues that they feel they have a duty of to the patient to do so. So is there anything negative by way of impact on whistleblowers that could be interpreted as deterring whistleblowing, or is there something quite contrary? But in principle, if two districts can catch fraudulent behaviour, that suggests sharing that best practice with the districts that are not so good at it.
I'd just like to make some clarification around the whistleblowing, and obviously, as I said, there's the two districts that these relate to housing benefit frauds, and the government changed the way that was done a number of years ago. So there's been a real massive change of how that is, and they pulled together and I can't recall what it's called now, but a central benefit fraud agency. I don't know what it's actually called, and two districts decided not to participate in that. So I think you're not comparing apples with apples, and it might have been a bit misleading. But what we can do is, so I think all of the districts, whether it's been through the central investigated resource or locally, take fraud seriously, and the Lincolnshire Counter Fraud Partnership are using that resource and awareness to help promote the whistleblowing line. So I think the trouble with statistics, it can be a bit misleading, and I think that's why we haven't been able to look in and do a deeper dive, is because it's a bit of a fragmented way that it's investigated. So districts are predominantly benefit fraud, not corporate fraud, which is what the county council tends to have. So we did this year join the two reports. The whistleblowing annual report was separate last year to the counter fraud, and I'm just having a rethink of maybe we should separate them back again so that we don't get this misunderstanding. We just thought because some of the whistleblowing do go into the fraud referrals that we just pull them together. But I just wanted to make it clear that there is a different systems within the districts. So I didn't want you to go away thinking that those other districts aren't taking fraud seriously and have got appropriate processes in place.
Thank you, Lucy. Paul.
Thank you very much, Chair. I'll just, there's three councils in a partnership. That's South Holland, that's East Lindsey with 0, and ourselves with 2. Our backroom services for benefit are provided by a company which we own, which is PSPS. They have changed the way that Boston used to work. All the prerequisites have to be there before things move on, and hopefully in doing that has sifted some of those bits out. But just like Lucy, until it's proved to me that there's nothing there, I'll still be looking. Thank you.
Thank you, Paul. Thank you. Lucy, do you just want to make a mention of the counter fraud regarding the business fund grants, the recovery grants?
That's an ongoing investigation, so I'm limited about what I can say. So all I can say is it was detected through our counter fraud work, and our investigation team has passed it on to the police to investigate.
Okay, thank you. Thank you for that. Stephen and then Ian.
Thank you. I'm just picking up the comment I think you put on page 16 regarding maintaining awareness of fraud, which I think is important. It's part of the culture, isn't it, of whistleblowing and fraud, that people feel confident that something's going to happen. I think the difficulty always is, and I'm sure you're aware of this, you can have lots of schemes giving out the information. It's making sure that people understand them and accept them. And I think there's something there that we all need to be constantly doing to make sure that people realise that actually going down these lines is not a fault. It's something which is positive, and that it saves money and it can actually improve the services all along. So I think we've all got some role to play there, and I really welcome the idea of you looking at different methods now of getting that message across.
Thank you, Ian.
Thank you. Couple of dim questions to start with. On page 19, you mentioned the prevention of fraud this year, the 450k. Which one was that, please? And it's the one in the dark blue, significant fraud, or the second from the bottom box from Councillor Allen. Significant fraud prevented 1. It says 450k. Which one is that? Closed off fraud now that we know which one it is?
I'll have to get back to you on that one.
That's fine. The other thing, and I need the council and the committee to understand where I'm coming from. This is not a value decision, a value statement I'm making. How much does it cost to have our fraud team? Because that's always one of the questions, and I do not want the council to understand that this is a case of great, we can make savings, because that's not where I'm coming from. Because this is an incredibly valuable service that actually is the sheer threat of having it, and prevention is an incredibly valuable thing you can't put a price tag on. But I think it's important because, again, when I see some of the things down here, like 12.5 million saved, that's a big ticket. Sometimes when I see the counter frauds have to state that, it makes you worry because it feels like they have to justify their existence. And that's not where I'm coming from. I think these guys do a fantastic job, and I think they say the prevention, especially the detection of some of this stuff, incredibly valuable service. But I think that's my question, is that it's important we understand how much it costs to actually keep the borders safe, as it were in this case.
So we do have an allocated budget, and we do publish the counter fraud, how much it costs within the transparency code. So what I've done over the past year is try to make the best use of the combined resources between the audit and counter fraud team, and we're looking to make better use of the data analytics and data. So the resources have changed, but the funding has remained constant
It's a total, but you spread the resource multitask.
but I'm just looking at the skill set and making sure that we make the best use of the combined proactive work, so that we're not both looking at the auditors looking at contract management, for example, and the counter fraud team. It's making the best use of those resources. So in terms of numbers, it has reduced over, and we had a vacancy, but we have again recruited, and we're looking to have someone put into that team to keep that capacity. But it isn't a massive team, but it's proportionate to what we can afford.
Lucy, that was great obfuscation, but the answer is, for me, is okay, I'm looking for rough numbers, because even if you're multi-skilling them, even if you've got pure people doing, because there will be people in that team that do just the counter fraud, and then there'll be people that you can cross-use. I'm just trying to get a sense of numbers.
Three.
That's not a very big team. And I'm now looking at Andrew, not at you at this point of that statement.
That sounds like something like a tenfold return on investment. If you're saving $1 million a year.
I won't ask you a awkward question, which is, if you had one more, how much would you prevent? Because that's the usual next question you get off the top of that as well. But I think for me, it's that investment area. It's always a balancing act. You just need to keep an eye on thing, because again, if you lose one, that's a 33% reduction. And also back to the unicorn conversation, if you've got people that have got great counter fraud skills, and you're also using them for audit work as well, training them to that level takes a lot of time. But I think it's just one of those things. We just do the watching brief.
I think you get the watching brief through the counter fraud work plan, which you approved at the beginning of the year, where it gave the resources. It also gives you an annual report of what we've achieved as a group. And I think actually it is about actually being smarter, working smarter. So it's not just as an absolute of the number of people, it's what you deploy those and how you work smarter. So I'm not quite agreeing that it's the number. I think the council's demonstrated a strong commitment to counter fraud. Not all councils have a dedicated team, and it goes in the round as a budget planning process like any other service, and the service hasn't had any reductions in those costs. It's just making sure, as a head of audit and risk management, that we use our resources a bit more smarter, rather than just having the people. And I think the auditors did. It's easy to train an auditor to be an investigator than vice versa. So I'm looking at multi-skilling. So I think so I understand your concern, and it's right that you have that watching brief, but I think you get that through the plan being presented to you and this annual report. So it's helpful to have these discussions.
The watching brief's not in that direction. My watching brief is, I'm worried that we've got enough resilience in the team. So I think the plan's great, and I think what they're executing is great. Again, it's just a case of, if you lose one, maybe considered unfortunate. To lose two smacks of intent, the old reports of being earnest. It is about just saying, again, it is back to the unicorn thing. Again, the skills required, and it's hard in this environment to get good people in. And I think we're very lucky we've got some good people at the moment. So this is more, the watching brief point was more aimed at this side of the room rather than that side.
Thank you, Ian. Thank you, Lucy. Any further questions on the counter fraud report? Are we happy to approve the recommendation? Thank you. Thank you. So our final item on the agenda is item 7, which is the work plan. So do you have any comments regarding that? Obviously, future work plan is listed there.
So this, thank you, Chairman. This is really setting out some of the discussions that we've had about your future work plan. So we have scheduled some items for September and November, but again, it's up to the committee, particularly yourself and the Vice Chairman, to see if that's the items. Some of them we have to do around the accounts, but again, whether you feel that that's an equal split between the two meetings that are coming up, which is September and November. The other thing to draw to the attention of the committee is that we are setting up the work with the Overview Scrutiny Management Board again to start those discussions so that we can look at that a workshop around financial resilience and some of the sort of governance issues that are being faced by other councils.
Comments, Marky? We do have a lot in September, but we may have to. Would you like me to sort of work with the chair and vice chair to re-look at the agenda and work with my colleagues in finance? Yep. Okay.